Alright guys, welcome back to another market update video. Um, so today we'll talk about the global markets, the Indian markets as well. Um, I have a very important thing to talk about today because I see a lot of you guys keep doing the same mistake over and over again, which I'll discuss in the beginning of the video itself. So first of all, before starting, guys, make sure that if you're getting any sort of help from this content, make sure that you like and share it as well, so that it gives me the motivation to keep making these videos. All right. So all right. So let's talk about the one mistake which you people, or which most of the people keep doing when they're trying to trade in the markets. All right. So suppose you've been told that Nifty, whenever crude oil moves up, right? Whenever crude oil moves up, Nifty is Nifty will tend to correct. All right. You've been told this point. All right. The second thing is whenever USD INR goes up, USD INR, all right. So whenever the currency of India falls, which is the Indian rupee falls, um, that time Nifty will also start to correct. All right. This is what you've been told. So when this plays out, suppose USD INR is going up and Nifty is not falling down. All right. Nifty is not falling down. So what happens is when this sort of structure plays out, where both of them are moving in the same direction, and this is true for gold as well. In the last few days, if you see, I think just a second. So if you see, gold is also falling, and equities are also falling in the last few days. All right. So equities are also falling in the last few days. The U.S. markets are falling very heavily in the last few days. All right. So what happens here is when this is playing out, where everything is moving together, then all your correlations will start to break down. All right. All your correlations will start to break down. So so now what is happening is either you're taking the wrong trade because of watching all these things together, and also I think crude is also um, started to correct a bit. Yeah, so crude is also starting to correct a bit from this supply right here. So so when you see that everything is moving in the same direction, all right, you see all the base metals as well, they are also starting to fall. So all these base metals, they are also starting to correct. Just a second. Yeah. So if you see all these base metals, they are also starting to uh, fall lower, right? So what happens in these sort of scenarios is when uh, when all these correlations start breaking down, when you're not sure what is actually going on in the market, um, you're either taking a wrong trade or you're doubting your uh, thesis, right? You're doubting your initial thesis as to what is actually going on. So what you need to keep in mind is that these factors which you're watching does not do not directly impact the movement of Nifty on the immediate next day. All right. So suppose you're watching crude, suppose you're watching gold, silver, anything, currency, whatever you're watching. These factors don't impact the movement of Nifty on the next day. All right. These are global economic factors which take a lot of time to uh, to get factored in. So there might be a lot of situations where the correlations might break down and you won't understand what is happening, right? So these factors don't lead to the don't affect directly the movement of Nifty on the next day. All right. What does affect the movement of Nifty on the next immediate day, or overnight, basically, what affects the movement of Nifty overnight directly is only the other global indices. All right. Only the other global indices and nothing else. All right. So when you're watching Nifty, more data is not actually good for your analysis. All right. A lot of data is not actually good for your analysis. Whenever you're looking at data, you want to see which is the data which is directly affecting the instrument which I'm trading, and which is the data which is affecting the instrument maybe on a much longer time frame. All right. So here, the foreign indices, the global indices, they're affecting the movement of Nifty immediately. All right. So suppose here US 30 is heading into this supply. All right. Actually, the main supply here is this one. So I'll just mark it. It's actually this entire area. All right. Because if you see, this supply led to the last low right here, this entire movement right here. So when US 30 is directly entering into this supply and you are carrying longs here, and Nifty is also going back up to this previous high which it made, then no matter if crude is falling, gold is falling, or whatever is falling, currency is falling, Nifty won't uh, gap up on the next day because US 30 might just fall down, all right, from the supply. So what you need to watch only for Nifty is the foreign indices and the chart of Nifty, obviously. All right, nothing else. You need to watch nothing else. So you always keep note of the things which are directly influencing your trade. So suppose I'm watching. Let's take an example. Let's say I'm watching Euro USD. All right, I'm watching Euro USD. So now, uh, which is the instrument which is directly affecting the movement of Euro USD, or which is moving together with Euro USD in the opposite direction? It is the dollar index. All right, dollar index will replicate all of these moves. There might be a difference in magnitude because there are a lot of other currencies in the dollar index as well. But mostly, if you see, both these charts are inverse, right? So now, if there is any little gap for me to exploit, suppose let's say Euro USD is at this lowest demand zone, all right, and dollar index is at this highest supply. So what I'm seeing here is the chart here, the reaction of the demand and the reaction of the supply are quite similar as of now. All right, are quite similar as of now. So there is no advantage which I'm getting on watching these two charts. But if you take the same example, let's say somewhere here, all right, at this supply, right, this is the supply of 28th September, 19th September. So 19th September is somewhere here, right? So now, if you see, this will be my demand zone for the 19th September and 20th September up move, the up move after that. So now, if you see, when it's coming down to this level, this demand zone is also very near to the 50 DMA, all right, very near to the 50 DMA, and Euro USD is also at the 50 DMA supply. So this makes this supply a very strong zone to take a trade at, all right. Similarly, in dollar index, it makes it a very strong zone to take a long at, because if you see, the 50 DMA is a very, very powerful tool for short term trends. All right, you see all the big moves, they start from the DMA. All right, so when I'm getting multiple confluences together, then I can take advantage of instruments which are moving opposite to me. All right, so similarly with the US index, if you see US 30 is at this supply, this is also near to the 50 DMA. So now there is no reason to take a long in Nifty because Nifty is also entering this supply. So when this is happening, I'm not expecting a break of this supply in Nifty. All right, I'm not expecting a break of this supply in Nifty because US 30 is going up into this supply after a huge up move, right? So at least we see some sort of sideways movement. So so when I'm looking at the chart of Nifty and I'm thinking, suppose in the morning the chart of Nifty was somewhere here, right, in this area. So it was a bullish candle. So when I'm looking at the chart of Nifty and I'm looking at the US 30 as well, then I know that this area is not going to get broken out overnight until and unless there is some sort of news inflow. That is always there. So if there is no news inflow, then this chart of Nifty is not getting taken out on the upside. This supply is not getting taken out on the upside immediately on most days. All right. So this gives me a very high probability trade to maybe go short into this or just stay out, just not take any longs. It's also extended from the hourly base. So if you see, this was the last hourly base which it broke out, right? So this is where our market is closing somewhere here. All right. So now, if you see, there's a huge gap right here. There's a huge supply right here as well, which was made in the morning session. All right. So this was happening during the market open. So the least I know is if it goes up here, then it would stall out at this supply. All right. And maybe give me a chance to buy next day. So what I'm trying to say is you must watch correlated instruments, but only those which directly affect the movement on the next day. All right. Then you take out the, then you have to figure out what sort of bias is developing. All right. So if I take an example, let's say, let's take this example right here. All right. This move, this down move. So if I add the chart of Nifty on this, on the same chart, so if you see, when I'm looking at this up move here, right? When I'm looking at this up move here, it's going back up into this supply, all right, going back up into this entire base actually, and now this candle is made right here, all right, and this is also, suppose, let's say this is also being formed currently. So what happens here is, you see Nifty is already trying to break down below this base, and now this is trying to break down below this demand as well, which tested out the supply for the first time. All right. Now, when these two things are breaking down together, that is when you have a possibility of a big down move. All right. So here, if you see again, it stays range bound because of this demand, but again we start breaking down here, and this is where the breakdown starts. All right. So overall, if you see, all the big moves will happen together. All right. So this move, this is where also, this is where Nifty also starts to fall. Now here we lead the market because we were trying to lead the market earlier as well, but it continued to fall. All right. So in this move, we lead the market on the upside. You see this breakout is huge, but then here, this is the area where we start lagging. All right. This falls, we start breaking down, and you can be easily saved from all this. All right. So what you need to watch is, how you need to watch these two charts together is, you don't see that if Dow Jones is down at the night, it means Nifty will downtrend today. That is a very, very basic way of looking at the data, and which is usually wrong. All right, what you want to see is, what sort of move can Dow Jones give now when I'm closing, right? So when I'm closing it in India, what sort of move can Dow Jones give at the night? So when I'm seeing that the close is happening into this supply, India is closing into this supply, then there is no reason for me to take a long trade expecting a breakout of this supply. What I'll do is, I'll just wait for the breakout, and then I'll buy the dip at the demand. All right. So whenever you're trying to get better at relative strength, you always see what is the next move which is possible, not what has already happened. All right. So relative strength or relative weakness, you should always see at the zone. All right, at some sort of zone, not in the middle of nowhere. If this is a breakout, it doesn't mean that this breakout will continue. There have been a lot of breakouts which have failed. All right, a lot of breakouts which have failed. So there's reason for those breakouts to fail. So if this is a breakout, this doesn't mean, obviously it means that Nifty might be stronger than other indices because it is breaking out and they are probably sideways. This is also breaking out here, but there have been instances where Nifty is breaking out and the other indices are sideways. All right, if you see, Nifty is breaking out of this base, but Dow Jones is mostly sideways here. So what happens is, after the breakout, even though Nifty is strong, doesn't mean that Nifty will continue to go up. All right. So this is not relative strength. We need to see what can happen now. So what do we want instead is, when Nifty is at a supply, we want to see that Nifty is trying to break through here. Every time Dow Jones is recovering from demand, see, we are trying to go at this supply. All right, we're trying to go at this supply. Dow Jones is doing the same thing, and then you get a huge trend out of it. All right. So always analyze correlations at zones. Don't do them in the middle of nowhere. All right. So these were the two mistakes which people usually make, and this is so this is, I think, where I'll end the video because it's been a long video. We'll just talk about the direction of Nifty in the coming days. So if you see, I'll just open the chart of Nifty just a second. So yeah, if you see, Nifty is rejecting from the EMA. All right, there has been some sort of volume expansion as well. There is this supply as well. So we need to be very careful. An up move will start only when this supply is tested, because this is the one which led to the last low. All right, we're still inside this complex range, so let's see. But anytime we start pushing down below these levels, please exit. I think you should, when this sort of move is happening, you must have seen a lot of stocks are falling. All right, so what is happening here is, stocks are being sold into the gap up. Sorry. So if you see, look at the Adani group is also breaking down. So all these stocks are being sold into the gap up. Look at this as well. All these stocks are being sold into the gap up. All of them are being sold into the gap up, right? Most of the stocks which are falling have been sold into the gap up, right, from the previous supply. So even the ones which are breaking out, if you see, they were breaking out because there's a lot of space here. There's no proper supply. So obviously, some will always go up, but mostly, if you see, the market breadth is not that good. All right. So here, if you see, the stocks which are up are very less, and it will reflect in your portfolio as well. When you start going through your portfolio, you'll see stocks are not moving up, even though the index has gapped up, because all gap ups are being sold into. All right. So whenever you see a gap up is being sold into, and then there's a volume expansion in the index as well, this is the time to be very, very light on longs and probably holding no longs. All right. So be careful. I'm not very positive on the market as of now. Rest we'll see when the market opens tomorrow, and we start trading. All right. So I'll see you guys in the next video. Now, hopefully you got to learn something. If you did, kindly make sure that you like and share the video as well. All right. So I'll see you guys in the next video. Have a good day.